Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 11th, 2022. In the market health check, got a second day of recovery. So we had almost no gap, brief sell off, and then a long continuous grind upwards to close at the high of the day, right at the edge of the dragon. Let's see, the 3-period hull is up. The slope of the 30 has reversed to extend upwards. The only negative we have on those indicators is the PSAR is still acting, as a lid on the enterprise here. So what that gives us is a tactical trading zone in this yellow box region. You can see it kind of that upper limit will decay a little bit as we continue to approach the PSAR. And again, if it breaks above that PSAR, then we would pick up a long side bias. We're within about, let's see, 12, about 2.5%, about 2% away from that swing high. That's about a 2% move to the top. This price level right here is the 2.5% sell off from the swing high. That's this line that shows you the 2.5% price sell off. This one shows the 5%. This one shows the 7.5%. Lining up nicely with Z3. So each of these represents, a sell off from the swing high of some magnitude. 2.5%, 5%, and 7.5% respectively. So now for context, we can see that this sell-off came down right to the 5% sell-off and now is recovering. It's recovered half of that in that move. So again, just trying to make sense of these moves. Yeah. So since we have recovered exactly half of that sell-off, I'd put this pretty much at a critical state right there. We would be equally expecting a move like this, say follow in the hull, something like that, or a breakdown back to here out of that 50% retracement. What kind of favors the move to the upside is that the last time it was down at this price level over in here, it made that move. So we wouldn't be surprised then to see this continue to grind its way north and then come and test 480 again. That looks like the strong channel, from 481 to 456. That's a $35 channel or $25 channel, excuse me. So my tactical play on this one is to have a pretty tight risk box right around the close near today's high. And so I would be ready to trade north out of that box, the continuation pattern. I would also be ready to make a tactical trade, reversal back to the Bollinger Band mean, and then back down here to C1. I think I'd be ready for either one of those tomorrow as a intraday tactical trade. So again, I think this is a market that's optimized for intraday trading. The value of those oversold indicators, for the channeling and the overreaction, we're already 2 days into a nice recovery move. That's why those are high probability ones. And the same price action that makes us feel worried about the downside move sets the conditions for the retracement move. And then the long-term slope of this trade is still fairly strong to the upside. That's about, by eyeball, something like a regression line. And that, notice how that takes the shape of the 30-period regression line extension pretty well. Just my little eyeball visualization. And now you can see the oscillation around that RL30 pretty clearly. How far does it move from that center line? And it gives you something like an upward channel that looks like this, and a downside channel that looks something like that. So to me, the upside room is still readily apparent. And now you can see what I'm looking for is I will be ready to trade that excursion like this. And then as this comes down here, if that breaks this lower channel band again, that's where you get some of these sharp moves down. So again, any move that comes through there, I'm going to be pouncing on as a way to come back towards, a retest of the 10-day low. But if this thing stays mostly within that price channel that's been hammered out, then the larger opportunity in the channel trade is to the upside. But the violation of the downward channel is still there. What's got me interested in that as a trade is look at the size of the sell-off moves to the downside are getting larger, not smaller. So while the channel is still upward, the size of these downward moves are getting a little stronger. So that tells me, again, if this thing, if these 2 days of gains are reversed and this starts to break down, that's why I want to be ready to exploit this kind of a move down to 456. And then if the 10-day low violates, it's going to come down and test the 30-day low en route to testing the Z3 excursion, which is the 7.5% correction. So you can see how that's almost like a cascading price action. So I recognize the bullish upward grind, but at the same time, I also recognize the willingness of participants to test these lower levels of support. So that's why, in my view, in conclusion, I would say tomorrow is going to be an interesting. We are in a critical state now, and I'm ready to take this in either direction. This is probably where I pick up the second entry, and then if this breaks above the all-time high, that's probably where I get my third position on above 482. All right, let me know in chat if that's helpful. What I would also notice is the shape of the RL10 here. sort of an absolute value. If I now start tracking the higher lows, for like COTA 2 purposes, and I'm just marking off the support levels where the RL10 turned, what we have is the beginning of that shape right now. You can see that the RL10 rolled over and now starting to flatten out a little bit. Another day up, and then this thing will certainly establish that as the RL10 low, and then it'll start moving upwards, in that direction, which now means that where the RL10 turns ends up becoming the place where the PSAR will flip on that line here. So if this continues to give us one of these upward moves like this, then when the PSAR flips from here, when it flips, the dot will come down here, and that becomes an important like swing support level at about 466. So there's really only a $5 risk box. If we were to get long here, then your risk box is only about $5, which is a fraction over 1%. If you were going to play that as a swing to the upside. All right. Enough. So cautiously optimistic. All right, here's our SRP, our SPY demarcation, SRP, or the SPY demarcation line. It was up 0.91. Treasuries were up 0.67. Diamonds were up 0.5. Russell was a little better than the S&P, up 1.06. Treasuries up, tech up strong 1.5. Emerging markets up 2.31. So the global response is a little better than the U.S. response right now. So let's check to see which sectors were worse than the market today, since there's fewer of them. And because I want to go long, I'm going to start by understanding what was weaker today. Finance, dang it, come on. Finance and then the biotechs were only up 0.88 and 0.73. Lumber, agriculture only up 0.6 and 0.65. Simon Property Group, the commercial real estate, was only up 0.59. Mexico up 0.16, then consumer discretionary up minus 0.12. So that is actually a favorable sign for the upward move when the relatively defensive play of XLP is underperforming the broad market, and then we'll see the sectors that are outperforming. So that would indicate like a rotation from the defensive plays of the S&P consumer staples and into the more growth-oriented ones. Then we have VXX down 3.5. It's noteworthy. Now on the downside, that the underperforming guys, there's our metals and industrials down here. Cliff down 2%, US Steel 1.2, TX, the steel company, 0.45, John Deere up only 0.18, and Microsoft up 0.23. So the metals definitely underperformed today as a sector, and they underperformed their buddy XLB, which is the materials, right? So metals rolling over, and this is money flowing out of XLB and towards the other, the growth sectors. All right, let's take a look at the sectors that won today. So again, the S&P up 0.9, consumer discretionary up 0.96. That again, that favors the growth story. Materials up 1.1, marijuana 1.11. Wheat and precious. Tech, this continues that second day of tech leadership as it outperforms the S&P. So we'll watch for that to continue. The large cap blended crypto up 1.3. The FANGs up 1.5. So again, that's the guys hitting the buy button on these uber large caps in tech land. So that favors the long side again. The other lumber, wood, is up 1.83, blended commodities 1.9, lithium, Arc Genomics, Bitcoin Trust up 2.6, Arc Innovation 2.76, Clean Energy finally makes a positive move, blockchain up 3.25, Bitcoin Trust 3.25, energy 3.4, really strong. I want you to notice just how good energy is right now. It's on a monthly summer and a daily summer as well. And it's riding the coattails here of oil, which is monthly spring and daily summer. So energy still has some juice. So you have oil 3.56, moonshots, Brazil, oil exploration 4.4, also strengthening the case for energy. And then finally, our little cryptos with Bitcoin, Ethereum, Bitcoin, Robinhood, and PayPal, that whole financial disruptor area. I'm going to put him in like a purple, just so we can see our cryptos today. So Coinbase, Robinhood, PayPal, the financial disruptors up 5+%. Virgin Galactic 3.5. Squarespace, the other financial disruptor. That's part of that theme for today. Devon Energy joining the energy play to the upside. So this looks like tech and energy today with a healthy dose of crypto. So yeah, Apple had a nice day, 1.68. So this looks like swinging away from finance and materials and towards tech and energy and the upside growth story. So when the FANGs are doing well like that too, coming out of that critical state that I talked about, I would be favoring the upside. I'm really ready to be aggressive on the upside on the intraday trade tomorrow, and I'm willing to hold pieces of that overnight, as part of a swing move in that direction. Let me know if that helped. It's part of that wabi-sabi Japanese, the subtle art of imperfection, that as we work on our craftsmanship, the mistakes themselves become features and become ways to start pulling together the lessons that we're learning until our body of knowledge is holding water. So the subtle beauty of imperfection, waste nothing. Wabi-sabi, WABISABI. All right, let's look at the daily the daily reports. Let's go to dashboard number 1. All right, so we're still in bullish normal conditions. We've recovered some of that sell-off period in the 2 days, starting to lead us back northward. When the ADX goes below 15 and then reverses to the upside, that's actually a good sign. It supports the possibility of that upward move. The risk on condition of the risk index and the risk Z is also favorable for. So what that means is this could be finding support here and then supporting another leg up. We're mindful that it's out of that critical state, it could suffer a little bit or a lot. So the downside move is still a concern, but that's what makes it a game. Now notice that now that we're deep into the gains of these last 2 days, that the overreaction and channeling signals are no longer in play. And it's alerting us to the possibility that EEM has had such a nice move that it is now a candidate for the overreaction to the downside. So today's very nice move in EEM actually postures it like a false breakout, that it becomes an easy target on the downside if everything rolls over tomorrow. So emerging markets have been lagging the US, and it's very good performance data is what now makes it a candidate for people to protect those short-term gains, which would then contribute to the downside rollover. Let me draw that as a concept diagram. It just came into my head, so I can illustrate what I mean. So we're talking about emerging markets and its underperformance relative to the S&P. Where's my pen? Lost my pen. All right, so the S&P compared to, if we just normalize the S&P, set that equal to 0, then EEM has been underperforming, by some amount consistently. It's been lagging. Today's performance, though, EEM up 2.3%, now creates this abnormally large gain. Well, it's still strongly correlated to the S&P, even though it has that slight moment of outperformance. So the argument would be, when you see this kind of this overreaction system to the downside, it's still below its 200-day moving average, so it is still bearish in that sense. And that means that the overall long-term trend of EEM there's still downward pressure on it. So if it turns out that this was just a dead cat bounce, then if the S&P starts to fail, you wouldn't be surprised to see EEM also fail large. And part of the large move out of EEM would be everybody that made money on this little upward move today wants to preserve that goodness. So when they start selling to protect, that actually accelerates the downward move. So this signal warns us that says that today's move in EEM was so good that if it doesn't follow through, then the downward move becomes a powerful downside. So we would actually set that up like a collapsing dragon. We would then go over and look at the chart and see where that lower limit of support is. And then if that gets violated, that's going to put us into a collapsing dragon on EEM to get this move. So we might be able to day trade this retracement move. Now, on the other hand, tomorrow could be a continuation update in the S&P, and this could be the second day of enthusiasm for EEM. And that's why EEM, to me, is a really strong candidate as a critical state. I treat these channeling and overreaction signals as critical states exactly like this. There's a larger than normal possibility for strong moves in either direction. That's why I love this little signal, right? So I wanted to say that. Let me know if that was clear. All right, you can now see the strength in, let's see, Chevron, ExxonMobil, Intel had another strong day. And then in the finance, American Express and JP Morgan. No dojis today, so that was a strong directional play in the Dow 30. Still a good number of auto framers available to us, better than 2 to 1. I really like Apple in that condition. I think Home Depot is pretty attractive here. It was down today while everything else was up. But the downward move was small enough that it signals channeling and overreaction. It has a 5-day down, and it's offering 3.4 to 1 on a leading candidate. It's one of the biggest components of XLY. So Home Depot to me is coming in my radar as a value play. This channeling and overreaction signals for McDonald's signals that as a critical state. Microsoft and Nike, that's hard to argue with 4 to 1 and 6 to 1. With Nike on a 5DD also. United Health showing a lot of interesting signals in here too. 4.2 to 1. Plenty of auto framers available in the ETFs. Treasury is always interesting when they're 6 to 1. I like this tandem here. The Russell and the IYR. One of them is the growth upside story. The other is sort of the alternate to equities story, IYR, and both offering favorable reward to risk on the auto framer. I love tech at 3 to 1 on the auto framer as well. I would be least surprised by another up day in tech tomorrow as it regains its market leadership. And oil exploration, massive goodness today on strength and energy. That's going to be on a short list. Plenty of auto framers to work with for our swing traders. There's your framing data. I'm always interested in treasuries. Microsoft and real estate, especially. Home Depot for the reasons I gave before. That 7.62 is the preferred level of risk using range risk. Using $7.50 as your initial risk box, you still get a 3.4 to 1 trade on that. Tech, I would look to see tech and the consumer discretionary having a good day tomorrow too. In an upward scenario, both of those should really benefit. Only Walmart and treasuries on the pinch. I like it when the S&P and Russell are near the top of this pinch stack that says that they are poised for breakout still, like it has not run away from itself yet. I like that. Tech is still relatively high. It's not 2-1, but it's, if they make it on this list, then they are relatively pinched, just not excessively so, at better than 2-1. Fall is still dominating, so we are cautiously optimistic. I like this metals and mining opportunity. Even though the metals were down today, that says that there's some latent buying interest in them that could rebound. Energy still crushing it. And when you see the tech leadership today and the MACD Four Seasons is still in the winter, that just says it has that much room to recover its relative recent underperformance. So this could be the start of a very interesting 2 weeks of outperformance by tech coming out of the winter into the spring and the summer. Amazon is also, if you were looking for an individual stock out of that narrative, Microsoft and Amazon really are attractive as part of that narrative. Here's the consistent strength: American Express, Intel, Devon, and then the two other energies, ExxonMobil and Chevron. That is connected to the oil and XLE pocket of strength. There's your oil exploration pocket of strength in every time frame, and the strength in finance still there. Positive upward shapes. That looks like this moment. So the upward story looks like that, and that's why a return to 480 is not out of the question, for this little piece of the move. And showed that on the market health check. Kata 2, anyone? That's the upside move back to 480 right there. And then remains to be seen if it can do that. But again, a collapse of that recent low, that 2-day low, now opens up these moves. That's the move all the way back to 420. The move to about 445, 455, about 460. So just doing architecture, support, and resistance lines there. So cautiously optimistic, critical state, Kata 2 style formation, critical state either direction. All right, that's everything on the daily charts. I'm not going to comment on each and every little trade on every chart. We're starting to get enough of these in here that's becoming a bit excessive to get in real time. So I'll do my best to hit the highlights. I'll do as much as I can. All right, there's the Z3 pinch, the breakdown that was available. This finds nice support. I like this one as like an RLXD entry risk just below the belly of the dragon. That's fine. When this already starts rolling over, we might be able to just scratch that one here instead of taking the full, minus 0.9. You can't prep and execute. If I'm going to do the RLX, the recovery, the retracement, it might be a low, a higher low, and I might want to try to get this. And once again, when that doesn't work, I like this tighter, I like that tight stop. And then that's where, hey, I'm short. or here on that. And that move pays for both of those. Why is the RL10 yellow? Because the MACD histogram is still, the slope hasn't gone negative yet. It doesn't do that until it goes to here. So there's a trade opportunity there. This is a great SSC. There's the belly of the RL10. He's catching it just as it's crossing the PSAR. Beautiful job getting paid. I'd have been tempted on this one to try this long again. It would have probably scratched or sold off a little bit. But then I'm also interested with these lower highs. That's consistent with the direction of the day. This is a little slow getting in. I'd like to see you get that here. Then that makes that a scratch, but then you probably wouldn't have exited because you're just following the PSAR dot. That's a reasonable fractional loss. That's a good, it didn't follow through like we want back to the VWAP. And now this is where I'd like to see you get in when the PSAR gets violated, because you have the low, the higher low. We're still looking for that return to the VWAP. And you end up getting that trade. So this is a little late getting in. If you're going to get out that fast, then you got to get back in here. This is not that's not the strict rules of the Kata 2 challenge. Which, the strict rules is to look at DIA and EWZ as smoothly trading, EWZ. I want you to write out your rule set, specifically what it is you're intending to do. And that's general guidance to everybody, that there's a lot of trading going on and it's not always clear what patterns, what system there. I'm feeling still a lot of impulsive trading, and I'd like to see you add some rigor and clarity. You'll see that when you see Tom and Joe's effort at accountability and strictly following rule sets to see what the rules tell us. Otherwise, you run the risk of like a scatter shot. On the other hand, you're getting, this is like in the wood shop, working on scrap wood to get a feel for how the wood is shaped by the tools. And so when you're trading at very, very low risk or paper trading forward and sort of documenting the results and seeing what you can see, it's still okay to trade this much and to learn to get a feel for what's working. But what I want you to also always be mindful of, not just looking at the trades you took, but things like these rising lows, or these lower highs that give you the idea of what the trend lines are. What's the shape of the PSAR? Where are we with respect to the VWAP as that magnet trade every time, right? If I'm just looking at the VWAP, there's a couple interesting moments on this one where I get that maximum excursion away from the VWAP. When it turns, there is sort of a magnetic attraction back to the VWAP. And notice how this one got most of the way, it got 90% of the way, and you got the fat part of that move. Failure to fail is information. The PSAR flip tells you that that stuff is happening. And even the bend in the dragon is telling you that that potential is there. The RL10 turn, the dragon turning, this becomes like an owl entry in that sense. And then the shot is towards the VWAP, and you got that move. The next time that you have a move of that magnitude away from the VWAP is this one. Notice how the magnitude of those excursions is about the same. They're able to draw it that far away from the VWAP, just like they did here. and then the snap back still gets there. And that's what makes this such a nice kata 2 entry, is because you have the low, the higher low, and you're buying it just as it crosses the dragon with a nice wide wrist box. And then just trust it. Trust those. Let it run up. That's a real, if you're going to be that strict on the downside, then you got to be that strict on the upside, and you'll still get that move. So lots of things to see on that. Good work. Getting now, I'm noticing the higher lows in the RL10 and the higher lows in the dragon. Notice the PSAR telling you what it wants to tell you about the trend. So we've got to get more out of it than this. These little fractionals, while it's making a powerful move, are telling me that you're holding the reins too tight. And we get that PSAR flip. We got to get more out of that. So I think you're holding the reins a little too tight. And that's why I don't think this is not the SSC challenge kata according to the rule set we have in the room. So that's why I want you to write out what your intentions are. And then you can see where are your urges overriding your explicit intentions. Unless you sort of commit to that rule set, what it is you're trying to comply with. This is looking more like intuitive trading. Still getting paid to learn, getting a feel for the tools. If we're thinking about this as Charles is in the foundations course, week 1 of 10, there's something to be said for just practicing whittling and getting a feel for the tools and how the wood is shaped under your hand. So keep firing. That's legit. Swing low, higher low. If you take that time, that's not even getting through the dragon. And if you're going to be that strict on the short or on the exit, then when this reverses, you got to get right back in here. And now suddenly you're going to get paid. And now you got the higher low. Here's where, instead of this, here on the first hint of a support and a recrossing of the dragon, because now you have a low, a higher low, that's your kata 2. And the idea is that this is going to get to the VWAP, which it does. Z3 pinch, another support and crossing of the dragon. Crossing of the dragons, we're a little late. Crossing of the PSAR, so we're a little late. Still, we're getting larger fractions of that move. But again, this is doing fine. The consequence of intentions. Z3 pinch, fake 1, go 7. Z3 breakdown, collapsing dragon, momentum, 1, 2, 3 exit. Now, support at the bend of the dragon. This is a good entry. I like getting paid. It comes up to the VWAP and rejects. So you got paid. That's good. This is where, you notice that you'd like to have re-entered. So this is a little bit late. It's still close enough to the VWAP that you're getting that excursion. And I like that you got paid. Now, when this rolls over, either here or here gives you that whole short. And this, I don't mind that as a higher low, as a COTA 2, but when that fails, you're now into this trade, and this should be short. And I'll say, all right, so no shorts. Then why are we? Oh, I see that. Yeah, that's why we're not taking that one. We're only doing that. Premature exit. And if you're going to be that strict on it, then you got to get long again here instead of here. And you got to get long back again here. You're getting bigger pieces of the upward moves now. That's pretty good stuff. Ups outweighing the downs. Good work. I like the effort on the return to the VWAP. Good. If you're going to stop, I'd like to see you get short here. That makes this a scratch. And now, with the same logic that you used here, I got to get back in here instead of there. And that'll make this even better. And now, if you're using that as your risk box, then this is about a 3R win because your MMRB is smaller. Too late getting out. Let's get out in here. When it rolls over at the Z3, there's a 1, 2, 3. There's a dragon crossing. So we gave back too much on that one. Then this should be here instead of here. Nice work holding through this. Reasonable exit at the managerial exit. That's good work. I like this, and so I'd like to see that be the stop and reverse. After a move of this magnitude, and it doesn't fail down to the VWAP and back to the support level, then I got to get in here, and then this at least scratches instead of losing one. And then this is slow to get back in. I can get short in here or in here instead of all the way down here. And that pays off a little better. This was a better re-entry. I don't mind this, but then you should be here, a loss, and then re-enter here. If I want to be strict on the use of that rising dragon to get back in, so I think we should, if we start making some of those adjustments, this will get positive. I realize this was yesterday's trade, but man, well, and so here's the start of the day. I like the idea short, good. Both of these are reasonable efforts on the downside. When that holds here, I'd like to see you get long here instead of waiting for this. I'm not sure what that pattern is, waiting for this. Good capital preservation. When it crosses the VWAP and the Bollinger Band mean, I can get short in here. That's a pretty good effort. So that should be the stop and reverse. Because now I've still got this 1, 2, 3 higher lows. That's the way I want to go. And this feels, that's a good shot. That's a good shot. Good effort. I'd be tempted to get long here. That one's really good. Unfortunate. Get in sooner, then that gets paid. Get in sooner, and that's a smaller loss. This is the one that makes a difference for the day. Yeah. Especially with the strength in tech all day today. And then John says, why are you guys fooling around with equities? Here's 20R in the Aussie on the threes. Higher lows, support at the PSAR. I like the effort on the short to get back to the VWAP. A little bit choppy. That will happen. You got on the right side of it here. This should be a stop and reverse instead of waiting for that. And then I like that as an exit. That's pretty close to the perfect entry. And then I think this may have given back too much, but that's not bad. Yeah, then re-entry a little sooner. Nice. That's what I'm looking for right there. Getting paid, logical break point, much more flow trading here. Got it. This is a good shot, good capture. I would have tried the short on this one and would have scratched out here, but that's a good, nice place for re-entry. Got paid, got short. The re-entry was pretty good. And then as it crosses the VWAP, smash. Opportunity, great exit, great re-entry. Really nice work in there. The one that paid off the most, you even notice that could have been another 5R inside that. That's pretty good work, John, in the flow. $19.5R with room for improvements. That's a nice problem to have. Yep. Winter, PSAR flip, tight wrist box. Still got paid a little taste. I love the short, getting paid. I like waiting for this to resume to the downside. Unfortunate. Then I got to get this low, higher low. Still, that's not bad on the super pinch. Just didn't have much more follow through. And you're running in, close to the end of the day anyway. Got paid. That's selling product at a profit in the market. So this is part of Tom and Joe's effort of trading each other's rule sets for clarity. Good use of partnering here. I'm looking forward to this weekend to you guys making a report on what it's like on the first week of doing this partnered paired trading, right? Boy, I'd be really tempted in here. Got paid, scratched. That was a tempting move on the downside, but great entry opportunity for Z3. Gets paid in a big way. Nice re-entry and scratch. Nice re-entry and paid. Nice re-entry and paid. Getting 8.5. We can live with that. You should trade his rules more often. Let's get those published in a document so the rest of us can see what you're doing, because somebody else might want to do that too. Let's get a good working list of what the clear set of instructions are for the benefit of team. Stop hogging all the good ideas to yourself, boys. Let's label those as rules underscore name style. I know rules style name So this might be rules. Day trading, Joe. So that when you post that in the chat room and people search on rules, that'll come up with all the files that start with the word rules. Let me also say for the naming nomenclature on these things, guys, when you're using the dates, don't put dashes in there. You might do something like, kata 20220111 EWZ, then that allows you to sort everything that you did with the kata entry by date, by symbol. And then that's a good discipline to get into. So nice work on that. Yeah, it took me a little while to figure out what you were doing with these blue circles, but then I remember, oh yeah, blue circle. What he's looking at is peaks and valleys in the RL10. So there's some peaks. Here's a valley, peak, valley, peak, and valley. And now we can see, the pieces of the trade that he's getting. I'd say there's one. But this was all yesterday, to be fair. But yesterday's support level matters on this move, that when you get this, bingo. Yeah. So I like the short and I love the exit, but man, don't miss those. I'd like to see this catch this. This is still not bad. Unfortunate. I'd be looking to get long in here and would probably have scratched. Then I like the short here. I probably would have scratched or at least taken the fractional loss, but then the routine trade would have gotten me in here. I probably end up exiting in here and trying to re-enter here. Might have scratched it here and re-entered here and gotten chopped a little bit. But automatic trading would be following the grain of the wood, and you'd get that one. That would make the difference on this. So blue circles for the peaks and valleys again. Nice. I like getting paid. I'd like to see you get this. That's still not bad. Good hold. Good hold. Great exit. That's nice. On a maximum excursion of 2.6, capturing 2.2, it's 4. Is about an 85% efficiency. That's pretty good. And then I would just say, dude, come on. You'd have gotten paid here. Here's your 1, 2, 3 crossing the dragon. That would have been a scratch instead of a loss. Still pretty good work here. Good lessons. Put your name on these so I can give you credit in public. There's getting to be enough of you that I'm not immediately associating all the names with it. Label your work. Put your name on it. See what that does to your mental state when you know that you're going to name your trades and post them in here. Does that drive you to do better? Not saying you're doing bad, but as a way to commit to skin in the game with your monkey, that you're serious, you're communicating your monkey, you're serious about this. You'll find that you have less impulsive moves. So, Nice, nice. And then reshort out of the Z3 pinch. I got to be short in here. I like how you've noticed that. Yeah, I should be there, but you still got paid. This was worth an extra effort. Not bad, not bad. That's got to be your stop and reverse. Don't wait for the confirmation to break out from the river. That's a full 2R on that one. And then when this holds, yeah, second position, third positions, managerial exits. This would get paid massively. So instead of 0.14, that should be about 5. So the big moves, the consolidation, almost like a Mickey Mouse trade, the big ears down, Mickey's face, big move up. And I want you to notice on this one, those strong price consolidation levels. This is like the Stadt in Germany, and then the Autobahn moves in between where all the high speed action is going. So when you notice where those support and resistance levels are, it now starts helping you understand the size of those moves. Waiting for confirmation. I don't know if I like that. You get bigger payoffs when you're trading from moments of greater uncertainty. 3 1/4 and then 8. A little bit of grinding work in here. Stick handling, learning to feel, the puck on your stick. So some grinding work in here that still nets 3 1/2. So keep doing that. Now the Z3 breakout. Now here's where that would have been ideal, but that's pretty good. When you got 2 positions on, then yeah, that's a great exit. That's worth a shot. I think you stuck around too long. When it took out the previous one, I'd like to see you here with a stop and reverse. You gave back a little bit here. That's a full R or 2. Good second shot, great sniper exit. Now getting paid on the retracement. Well done. So that's what 11.5 looks like. Not too shabby. Unfortunate. So that's where I got to get, yeah, as you notice, that's where the RL, the RL10 reverses itself. That's a big piece to give back. There's a potential second, and then that's given back too much. I'd like to see this come out of here. Yep. Reasonable effort. That could be a stop and reverse. That would get paid a little bit. Higher lows. Caught a 2 right there. That's the one. Now that gets paid. I like this. That's a good preservation. I like this. This should be a stop and reverse that ends up scratching. And then this is a little late to get in. I'd like to see you get in here. This short should be stopped and reversed here, and then that would pay for all of it. Still getting there, and you can feel the flow, and you're getting paid, and no big losses on this. Respecting the PSAR, getting a feel for the indicators, and we just think of that as stick time. Trading with skin in the game. Nice work. All the metals were down today. Here's where most of that pain and suffering occurred from the gap opening. So that might have been tradable. I'd have been tempted in here. I love that short. I love that cover. That's an SSC. Notice the higher lows, the major pain and suffering, PSAR flip there. So that's an SSC. Low, higher low, winter turns to spring, PSAR flip. So the one that got you paid was also the stop and reverse for the SSC, Kata 2, and probably sniper exit. Kata 2 reentry, scratch, and this all would have ground to a halt. And then after this long period of SQC and Z3 pinch, the breakout trade is available, except it's so late in the day, we don't get that. That tells me there may be some carryover buying on a dip in what was been a very strong sector. So that looks like some hopeful position taking with the idea that the metals could be ready to go tomorrow. This was a link to some craft knowledge work that Bob posted in the chat room. I haven't read all the way through it, but anytime Bob Rourke posts stuff, I read it. The real reason I'm going to read this is because it's wisdom from 1940. If it's still enduring, you betcha I will. Them old fellers knew things. All right, that's everything we got for today. I'm going to be reading this tonight. Take good care.